Every Nifty index has a rhythm, period of expansions followed by long consolidations. Today, we will try to understand what is happening in 11 major Nifty indices, try to figure out where each one sits in that cycle right now, and what the past tells us about what comes next. Let's get started. Hello and welcome back to the channel. I'm sharing our April 2026 trading playbook from Minerva Capital Research Solutions, a SEBI registered equity research firm. In the next few minutes, we'll go index by index and use historical patterns of expansion and consolidation to figure out what may lie ahead. Let's start with the index that sets the tone for everything else, Nifty 50. What you're looking at here is a 17-year story. Since 2009, Nifty 50 has moved in clear alternating cycles, a sharp expansion phase, then a long consolidation, then another expansion. We have labeled them A through E. Look at the drawdowns during each consolidation, ranging from 15% and going all the way to 34%. Painful in the moment, but every single one was followed by a fresh expansion that took the index to new highs. The average length of each consolidation, ignoring the first consolidation cycle, was around 25 months. Nifty 50's last all-time high was on 27 September 24 at 26,179 with a price to earning of 24.3x. Apply the 25 months rule here and you get a period starting from November 2026 as the likely end of the consolidation phase. During this consolidation phase, the Nifty can move up or down 10%, that's okay. But after November 2026, it is likely that it will start to break out and start to trend upwards. What it means is the next 6 months may still be choppy, but if the history is any guide, we are approaching the launch pad for the next expansion phase. Next up, Nifty Bank. This one's a beautiful chart. For 5 straight years since Jan 2021, Nifty Bank has respected an upward sloping channel. Every dip to the lower band has been a buying opportunity. Every rally to the upper band, a pause. Right now, we are trading close to the mean. And the price to book is reasonable for the sector at around 1.9x. What also is interesting is from the historical times, the price to book has actually compressed. It used to trade at 3x at a particular time and now around 1.9, 1.8x. Our view, Nifty Bank can move either way in the short term, but any meaningful drop is a buying opportunity. We do expect it to cross 61,550 going forward. Let's also talk about the two major indices within Nifty Bank, the Nifty Private Bank and the Nifty PSU Bank. First, Nifty Private Bank. This has been a steady compounder. 4 consolidation phases historically, the drawdowns have been getting progressively shallower. They were once up to 32%, 49% during COVID, and now just 17% in the most recent one. This is a sign of a maturing and a more stable sector. Price to book today is around somewhere 2.2x at the lower end of the historical range, which is constructive. Our view, structurally healthy, valuations are reasonable, a core long-term holding. Talking about Nifty PSU Bank. The history here is dramatic. A 76% drawdown was the trauma of the early NPA cycle. But notice how each subsequent consolidation has been milder, 29.7%, then just 20.3%. The sector has fundamentally healed. Current price to book is 1.4x, well below 1.62x that we saw in the recent Feb 26 high. Our view is Nifty PSU Bank is structurally strong and might make a new high in the midterm. Now FMCG. And this is where things get interesting from a valuation lens. Nifty FMCG has gone through 3 completed consolidation cycles with drawdowns of around 19% going all the way to 30.5%. Each one ended at a meaningfully lower price to earning than the peak. Here's what compelling. FMCG is trading at a price to earning of 36x. Its 11-year historical average is 41x. So we are below the long-term average and FMCG will try to recover and cross the long-term average. Our view is this is the time to start accumulating quality FMCG names. You may not catch the absolute bottom, but valuation is on your side. Nifty IT, and this is one of the most punished indices over the last year. Pardon us if we have a contrarian view, but let's deep down in this. Look at the chart. 5 major consolidations since 2009, each with drawdowns between 26% and 38%. Brutal in the short term, but every single one was launchpad for the next leg up. The current correction has been driven by genuine fears around AI disruption, clients delaying deals, margin pressure, the whole narrative. But here's the thing, Nifty IT now trades at price to earning of just 21.5x. This is a massive derating from 36.4x it commanded at December 2024 peak. The valuation reset has largely been done. Our view, Nifty IT seems to have bottomed out. The AI disruption fear has more or less been priced in. This becomes a classic accumulation zone where probably you can buy on dips or you can accumulate through ITBs. Pharma, and this is where we are cautious. Nifty Pharma's history shows three consolidation phases, but the middle one, a brutal 53.5% drawdown. That's unusual and reminds us pharma can be a slow bleed sector. Current price to earning is 33.66, down from 39.66 at September 24 peak. The valuation reset is happening, but momentum is still bearish. Our view, consolidation with bearish momentum might continue. Don't rush in. Let price action confirm a bottom before allocating fresh capital here. Now, one of a more bullish setups, Nifty Metal. The structure here is simple. Two completed consolidations. The index has reclaimed strength and price to earning has compressed from 35.74x in mid 2024 down to a much healthier 21.86x. Healthy valuations plus long base plus improving global commodity trends means a constructive setup. Our view, Nifty Metal is expected to rally further in the midterm. This sector is worth staying invested in. Nifty Energy, historically the most volatile of the lot. Look at the drawdowns 59%, 41%, 25%, 34%. When energy corrects, it corrects hard. But the flip side is also true. The rallies are equally powerful. The good news, price to earning today is 16.54x, among the lowest in our entire deck. That's not stretched at all. Our view, Nifty Energy is in a consolidation phase right now and is expected to rally in the midterm. Patience pays here. Nifty Auto, and here we hit a yellow flag. Auto has had four consolidations historically, with drawdowns ranging from 20% to a sharp 61%. The index made a high in September 24 at a price to earning of 27x. The puzzle. Today's price to earning is 30.3x, actually higher than the last week. That's because earnings have softened while prices have held up. Our view, Nifty Auto is expected to consolidate in near to midterm. Trim, don't add aggressively. Nifty Realty, the most cyclical chart in the entire deck. Look at the history, a 79.8% drawdown post 2008 and a 43% drawdown after that. Realty doesn't do small correction. When it turns, it really turns. The 2024 high came at a price to earning of 71x, that's frothy. Today's price to earning has cooled to 36.8x, which is healthier. But technical structures still suggest we are not done consolidating. Our view, expect continued consolidation in near to midterm. Stock picking matters more than index exposure here. Let me put all of this together on one screen. Our biggest buy convictions are emerging from the banking space, the metal and the energy sector. Three sectors with reasonable valuation and constructive technical structure. FMCG and IT can be accumulated gradually. Both are trading at discounts to their long-term averages. Patience here will likely be rewarded. Auto, realty, and pharma are the sectors we need to be cautious about. The momentum seems to be weak, the valuations are mixed, and consolidation is the most likely path forward. And the broader Nifty 50 setup, expect choppy markets till around November 2026. After that, based on every prior cycle, we should enter a fresh expansion phase. The big lessons from 17 years of Nifty data, consolidations always feel painful while you are in them, but they are the foundation for next move up. Position accordingly. That's our trading playbook for April 2026. If you find this useful, hit like, subscribe, and ring the bell so you don't miss the next update. Drop a comment telling me which sector you're most bullish on. A quick reminder, this is research, not personalized advice. Please consider your own risk profile and consult your advisor before investing. Standard disclosures apply. My name is Nishant Gupta. Until next time, invest with patience and trade with discipline. Goodbye.